Let's take a look at some charts on Tezos from this week's article on Brave New Coin. So Tezos is a proof of stake coin that uses staking as its consensus mechanism. It is in the yellow here, sort of in the middle of the pack for most things. Transactions per day for Tezos are relatively high compared to its peers. I had to remove Tron on the transactions per day side because Tron has no fees and Tron's transactions per day are in the millions. Doesn't really make sense to include them. It almost doesn't make sense to include them on daily active addresses either, but they do have Tether on there that influences that value pretty significantly. You can see it's just, blown out. Most of this is junk, as is the transactions per day for Tron. Most of Tezos's transactions are probably staking related, considering 80% of the network is being staked, and there isn't much else to do with Tezos other than stake it, which is kind of a problem. I think at the end of the day, you need some sort of activity for the token. It's not a store of value, clearly. And, Ethereum isn't a store of value either. They have dApps and transactional mechanisms, DeFi, that sort of thing. Other proof of stake coins have that sort of activity as well. So I think it's going to be difficult for Tezos to carve out its niche here, as far as what it's actually good at, what it's actually better than its competitors at. Thus far, it's really good at upgrading and self-amendment, avoiding messy hard forks and that sort of thing. If you look at all the validators in Tezos, it's really best case scenario because these are not exchanges for the most part. There's 7 exchanges. I'll talk about that in a second. Most of these aren't exchanges. Most of these are just random nodes around the world, which is good geographic distribution. Most of them have been in the baking scene for quite some time. Varying yields, varying fees. This is kind of what you want to see with a vibrant and competitive validator situation. They do require a staking bond, which is 10% of their total capacity. So in the red here, that means that all of these validators need to buy more Tezos to increase their bond so that their proof of stake rewards are as high as they can be. Without this, their staking reward goes down. Total value stakes around 1.58 billion. It's fourth notionally behind .88 EOS, ahead of Algo, Atom, ETH, Tron, SNX, NEM. In 2 years' time, we'll see what these bubbles look like, but I highly expect ETH to eclipse everything when proof of stake is finally launched. The issue with ETH proof of stake right now is that it's in its infancy, requiring you to basically lock up your ETH for 2 years, which for some people isn't going to happen. Whereas Tezos and most of these other ones, you can just lock and unlock it kind of at will, and there's no time requirement. Looking at the Tezos held on exchange bakeries, 23% of the total circulating supply is held on exchanges, exchange bakeries, which can be an issue down the line if there is a governance dispute where it is in the exchange's best interest to sort of vote against their users. Users can then remove their Tezos from these exchanges, basically pull their voting power from these bakers and move it elsewhere. Most of it's on Coinbase, Kraken, and Binance, with very small portions on a few other exchanges. OKEx, which is one I've been tracking every month, what they're doing with their Tezos. Their staking balance dropped dramatically to the point where they're only holding less than 200,000 Tezos. So it looks as though a large player just left the OKEx bakery altogether. Looking at on-chain stats for the token, transactions per day in the line here, fees in the fill. They implemented a new fee structure system in November, which hopefully keeps fees down. I'm not sure why this transaction per day spike happened. I mean, it's happened several times before. So I wouldn't say it's necessarily organic. This isn't a bunch of people collectively not using Tezos all of a sudden. This is probably some bakery or something temporarily going offline or holding transactions back or something. But nonetheless, it's very clear there's been a peak in transactions, and transactions per day have fallen off kind of ever since. Fees are holding steady, which is good. You don't want runaway fees with falling transactions. That's probably the worst case scenario. So fees are higher historically than they have been in 2019. In 2020, transaction on-chain activity has been higher in 2021 historically, compared to 2018, 2019. And then if we look at active addresses keep rising I assume this is staking activity. I assume this is people like me who are just, baking or staking Tezos and getting payouts every so often. And that is increasing the active addresses. So it'd be interesting to see what this would look like, the active addresses without the stakers on there, if that's even possible to see. But my guess is the active addresses would diminish significantly. So I think this looks more bullish than it is, because an active address is any address that changes in value from the previous day. So it kind of doesn't make sense that active addresses are still rising if the payouts aren't every day. But I don't know if every bakery does payouts at the same time. And to see these little blips every other day or every once a week, let's say, that's looks like classic proof of stake payout behavior. So I assume this is all staking rewards related. NVT, inverse metric of economic utility, is going to be also falsely low because all that staking reward activity is included in this calculation. Nevertheless, it is basically at the all-time lows, saying that market cap hasn't adequately priced in on-chain activity. So do with that what you will, but together, this stuff, even what's weird is that the transaction count hasn't mirrored or mimicked active addresses. So I don't know if they're just not counting staking stuff here and they are counting staking stuff here, they being coin metrics. I don't exactly know the exact details there, but it's kind of strange. So in a vacuum, I'd say this is incredibly bullish. Active addresses are rising to all-time highs, even post ICO distribution, and NVT is falling to all-time lows. But I think there's more to meets the eye there. Google Trends rose quite a bit earlier this year, briefly rose again, and then have sort of just kind of died off to nothing, and that's kind of mirrored price. I mean, price, if we move on to technicals, has really been quiet since July to September. Since the all-time high, 450, price has declined and not recovered the highs, not broken the highs. It's lost ground significantly against BTC and ETH. So the obvious next question is, will we see rotation from BTC and ETH or wherever else into Tezos? Because it hasn't moved yet. It's listed in a lot of places. It hasn't moved yet. 80% is being staked. There's not a lot for sale at the end of the day. I think it has a decent shot at doing something. I don't think, if we look at the BTC chart real quick, I don't know where this goes from here other than zero, at least tries to. This is the BTC pair again. It is in the previous accumulation zones. So previously it needed a few months before bottoming. Maybe that's the case here. Haven't seen a capitulatory spike, bullish divergence on this in the volume range, but to see it range up here and then literally just fall off the table over the next few months, I mean, that's what's not priced in here. What you're not seeing is the I guess it's not BTC's overperformance or ETH's overperformance, it's just Tezos' sheer lack of doing anything since September. You could argue inverted head and shoulders here-ish. I'd be waiting for the bullish 5200 cross on the daily. I'd be waiting for anything above 280. 280 is a big level here on the USD pair. Yearly pivot there as well. So if it can get a bullish cross above 280, I'm for it. But right now it looks like it's stuck in consolidation hell and just really not doing much of anything. Another thing I don't understand is this open interest on Bitfinex, both for the USD side and the BTC side. I mean, we're seeing slightly rising long interest despite some of these longs being down over 50%. That doesn't really make sense to me. And all-time highs on the USD pair, long side open interest with price doing literally nothing. I mean, we had longs almost double based on this graph, and price moved 20 cents. I don't know. It looks strange. Clearly, there's a lot of people who are still believers and expecting higher highs here. So the issue is the crowded trade is the long side, especially on the BTC pair. Anyway, so VPVR resistance 280. That's the level I'd be watching. Set an alert for 280 and just walk away at this point. The cloud likes a potential edge-to-edge move to 310. This sort of triggered November, December. Didn't really do anything. Again, it's got this inverted head and shoulders stuff that you can kind of see a little more clearly here. It's definitely not, I'm always looking for continuation or consolidation. Is the consolidation bullish or bearish? If it's not clearly one or the other. Is it something of anything? You know, does it have shades of reversal here? Yeah, it does, because we're making bottomy bottoms, right? So this could be an edge-to-edge move to 310. I'm not a believer until 280 plus at this point. And then once again, the Tezos BTC pair. Like I said yesterday on Twitter, it looked like it's about to add a zero to the front. So it looks like it's about to break 10K sats. All-time low is probably around 7,500 sats, at least on Kraken or Bitfinex. So yeah, this doesn't look good. I mean, there's naysayers about moving averages, but man, when moving averages are right, look at this. It's just like, here's your long signal, here's your exit, here's your short signal, boom, down 63% since that cross. There is a yearly pivot down here at like 8K sats. Bullish divergence, like I said. I'd love to see a volume spike, just a massive volume spike. I'd love to see these longs get margin called or scared or something, you know. Ideally at the same time you get this volume spike, you get longs just dropping off the table. That would typically indicate the bottom. Right now, it's kind of a fast bleed race to the core. So it's a tough buy here to step in and say like, yeah, this is going to mean revert eventually. And this has a chance at reversing. You know, it looks like it was setting up for an inverted head and shoulders here. Like, it was perfect. If you were to rewind the tape a little bit to mid-November, it looked like it was going to bottom here. And then it just, you know, continued to do nothing on the USD pair. And the BTC pair suffered significantly. So, you know, not much. 2020, not great of a year. Not that great of a year for Tezos, despite the all-time high, because fundamentally, not much has really changed from the outside looking in. You know, they've had successful amendments. Yes, on-chain activity is sort of up. Active addresses all-time high. But I don't think anybody's doing anything with Tezos-ish. You know, there's no vibrant, loud developer community on Twitter, or there's no revolutionary gambling stuff like DeFi and ETH. You know, there's nothing too exciting about Tezos. I think that's the biggest problem right now. But it is listed in a lot of places, and it's basically a warm body that's going to move once BTC settles down. So I'd watch charts like this just for the despair. Watch for that despair and buy it close to the bottom as you can. Watch for that consolidation down here, sub 10K. And it kind of wouldn't surprise me if, like most alt BTC pairs, after they decline 90%, it has some sort of mean reversion spike quickly in a few days' time, once that bottom is established.